Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourself, Banking and General Knowledge, etc. Today I will discuss some potential overseas posting examination questions and their corresponding sample answers for bankers. Today marks part 3 of my Paths to the Corner Office series for overseas posting examination questions and their corresponding sample answers for bankers. Now MCQs from pre-shipment and post-shipment finance. UCP 600 was published by which body and in which year? The options are option A WTO 2000, B ICC 2007, C IMF 1995, D RBI 2010. The answer is option B ICC 2007. The next question is under UCP 600 an LC that does not mention whether it is revocable or irrevocable is treated as option A revocable subject to amendment without notice, option B revocable by default, option C standby LC, option D expired and invalid. The answer is option B irrevocable by default. The next question is the maximum number of banking days an issuing bank has to examine documents and determine compliance under UCP 600 is option A 3 banking days, option B 5 banking days, C 7 banking days, and D 10 banking days. The answer is option B 5 banking days. The next question is a bank that adds its own undertaking to pay under an LC is in addition to the issuing bank's undertaking is called option A advising bank, B reimbursing bank, C confirming bank, and D nominated bank. The answer is C confirming bank. The next question is which principle of LC states that banks deal only with documents and not with the actual goods or underlying contracts? The options are A independence principle, B strict compliance principle, C document principle, autonomy of documents, option D good faith principle. The answer is option C document principle, autonomy of documents. The next question is a stale bill of lading under LC practice refers to. The options are A BL presented more than 21 days after its date of issue unless LC states otherwise, B a P&L issued for damaged goods, option C a BNL without the captain's signature, option D a BNL presented before the shipment date. The answer is option A BNL presented more than 21 days after its date of issue, unless LC states otherwise. Next question is a transferable LC allows the original beneficiary exporter to option A transfer the LC to any number of second beneficiaries without limit. Option B transfer the LC to one or more second beneficiaries up to the original LC amount. Option C requesting the issuing bank to directly pay a third party. Option D use the LC as collateral for a domestic loan. The answer is option B transfer the LC to one or more second beneficiaries up to the original LC amount. The next question is a revolving LC is most useful for option A one time large capital goods export, option B regular or repetitive shipments of the same goods to the same buyer, option C advance payment arrangements, option D project exports with deferred payment. The answer is option B, regular and repetitive shipments of the same goods to the same buyer. The next question is a green clause LC differs from a red clause LC in that it additionally covers option A, insurance of goods during transit, option B, storage charges in warehouse or at the port of shipment, option C, customs clearance costs at destination, option D, freight charges to the destination. The answer is option B, storage charges in a warehouse at the port of shipment. The next question is the party who requests applies to the bank to open a letter of credit is called. Options are option A, beneficiary, B, advising bank, C, applicant, importer or buyer, D, confirming bank. The answer is option C, applicant, importer or buyer. The next question is under the Negotiable Instruments Act 1881, a bill of exchange must contain option A, a conditional order to pay, B, an unconditional order in writing directing a person to pay a certain sum, C, a request to pay subject to delivery of goods, D, an optional direction to pay upon receipt of goods. The answer is option B, an unconditional order in writing directing a person to pay a certain sum. The next question is in DA documents against acceptance terms or the importer receives the shipping documents. Option A, only after making full payment, B, only after depositing 50% of the bill value, C, upon signing and accepting the bill promising to pay later, D, after the goods are inspected and certified. The answer is option C, upon signing and accepting the bill promising to pay later. The next question is from the exporter's risk perspective, which payment term is safest? Option A, DA, documents against acceptance. Option B, open account. Option C, DP, documents against payment. D, consignment basis. The answer is option C, DP, documents against payment. The next question is the person who draws a bill of exchange in export trade is option A, importer, B, issuing bank, C, exporter, sh- D, shipping company. The answer is option C, exporter. Next question is international collections when LC is not involved are governed by option A, UCP 600, option B, URC 522, option C, Incoterms 2020, option D, ISPP 745. The answer is option B, URC 522. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.